Next, we're going to look at the Guideline Public Company model for the TagniFi Excel plugin. And so this is a model that's used to run valuations as of a historical valuation date. It's found again under the model library under Browse Models. This version is the commercial and industrial version. So you just go under commercial and industrial, and if we just type Guideline, it'll show up here. So you just hit Open Model. It'll open this model right in Excel. And to get started, all we need to do is go to the Input tab, fill in the blue cells that have the inputs. And so the first 5 or 6 rows here with inputs are going to be for the headers throughout the report. The primary inputs are going to be your data value. So here we have a 12/31/19 data value in this example. And then we have the filing lag below that. So this filing lag is something I wanted to spend a little bit of time on to cover. So all of the data that we receive from the SEC, we timestamp. So we know exactly when that data came out into the public market. And you can use that in your models using this filing lag. And basically this 90-day filing lag is going to allow you to accept filings or data that happened after your valuation date or was filed after your valuation date. So in this case, we have it set to 90 days. That creates a filing cutoff date of 3/30/2020. And so basically anything filed on or before 3/30/2020 is going to show up in your valuation report. And this is used to allow for that known or knowable theory, to accommodate that known or knowable theory with valuation, so that you can pull that data in even though it wasn't available on your valuation date. That 12/31, that calendar year 12/31 data is most likely not going to get filed with the SEC until February or March, and so this allows you to pick that data up even though it's after your valuation date. So that's how that works. The next inputs are going to be your ticker symbols. So the model is set up for 20 ticker symbols. You can either type those in here, paste them in from another source, or you can even paste these in from the TagniFi Search Console. And so you just paste them in here and they'll show up and pull in automatically. Next to the tickers, we have a filing lag override. So the override is going to allow you to override that 90-day override that we have for the entire model. And so in this case, these are retailers that we have, 6 retailers here. Comps 1 and 3 actually had a latest quarter end that was after our valuation date. So we had to reduce that from 90 down to 45 days just to make sure that the latest quarter ends were leading right up to our valuation date. And then below we have a few more options. You can change the rounding throughout the model. So if you were to change this to 3, it would change it to millions and such. Then we have a share price type switch, so you can toggle between the closing share price as well as the average share price on your valuation date. Next switch is going to be for including long-term investments in your market value of invested capital. By default, we do not include those, but if you have any subject company or any public comps that have significant public securities that are non-current on their balance sheet, toggling this to 1 will pick those up. Apple would be an example. They have a significant amount of non-current public securities on their balance sheet, and so changing that to 1 would pick those up. Then the last 2 inputs here are going to be the percentiles. So you'll have a lower percentile of 25 set here, as well as 75th percentile for the upper range. And so this will just flow through the model automatically if you change those, so you can change those to whatever you'd like to use. And that's it. Really, everything after this tab now is going to get pulled in automatically as of our valuation date using these tickers and these settings for the model. And so we'll just flip through this here real quickly just to do a little bit of a walkthrough. The summary page, this is a capitalization summary. It's pulling in as of our valuation date the shares outstanding from the most recent balance sheet, the price per share on our valuation date, calculating the market value of equity. It's reducing for cash and adding debt to come up with our market value invested capital here. Notice above we have these Excel groups or these expansion bars. So if you click into these, it'll give you the detail behind those numbers. So here we can see the detail for the cash calculation. And we can do the same thing with the debt calculation just to the right of it. Yeah, so that's the capitalization summary. Next we have operating data, right? So this is the latest fiscal year operating data. In this model, we're pulling in revenue, EBITDA, EBIT, net income. Note that these models are not locked, so you could insert rows or columns if you'd like. So for example, if there's another line item or tag that you wanted to include, you can just insert that and pull it into the model. So you can certainly make adjustments to these models as you need to. Over to the right, we have margins being calculated. And then down below, you'll see these statistics for every page. So here's that 25th and 75th percentile that we saw on the Inputs tab. Next tab is going to be the same data, except this is for the previous fiscal year. Then after that, we have latest 12 months data. So this is going to be pulling in all of the data leading right up to our valuation date here. So you can see everything leads right up to that 12/31 valuation date. Next, we have the next fiscal year estimates, right? So this is using the TagniFi estimates data set. We have 3 years of analyst estimates as well as the next 4 quarters of analyst estimates. So this is pulling in for the next fiscal year revenue, EBITDA, and net income, as well as the number of estimates. So by default, this model is set up to pull in the mean consensus number. We also have median or standard deviations and high, low, all sorts of different data around these estimates. But by default, it's going to be pulling in the mean estimate. Next, we're going to be calculating the market value of invested capital multiples. So we're taking all of that capitalization data as well as the operating data and the forecast data to calculate these MVIC multiples here. So we have our EBITDA multiples, both historical and forward, EBIT, and then revenue multiples. Next, we have our market value of equity multiples. And so these are going to be, again, historical as well as forward multiples. Next, we have a historical growth analysis. So we have annual growth, 5-year compounded annual growth. These are historical growth numbers. Next tab is going to be forecast growth numbers. So these are using those same analyst estimates going out 1 year, calculating revenue, EBITDA, net income growth. And then we have a 3-year forecast of growth for the same data. Next is a ratio analysis. So liquidity, leverage, and activity ratios all calculated automatically. After that, a DuPont return on equity decomposition, followed by a CapM analysis. And so here what we're doing is taking the capital structure for each of the comps and then the taxes. So we're taking the average tax rate for the last 5 years, and then we're unlevering the beta. So here you can see we have the unlevered betas for these comps. And basically this data then is going to flow through, what you want to select for your subject company. So you can change some of the selections in here on row 43. In the cost of equity, we're pulling in the risk-free rate for you automatically. So this is by default using the 20-year treasury. And then the equity risk premiums, you'll see those are in blue. Those just mean that that's something you would need to provide and type in from your own data source. Over on the right, we have cost of debt. So we're pulling in by default the Moody's Baa cost of debt as of your valuation date, and then running it through to come up with a weighted average cost of capital. So that's the CapM weighted average cost of capital tab. After that, we have the support for the beta calculation. So this is how the beta is being calculated as of the valuation date. These are all using split and dividend adjusted share prices. Next tab is taxes, just to support the average tax rates for the CapM approach. And then after that's going to be a company reference. So for every comp we have selected, we have a full description as well as information on their latest filing with the SEC. And we also have industrial classification. So here we have the SIC code, the NAICS code, as well as the TagniFi Industrial Classification System, or TICS, where every company is assigned a sector, industry, and segment. So that is the Guideline Public Company model. It's a great way to really get started with running valuations as of a historical valuation date, just to value a subject company. So thanks for your time. Have a great day.